We are live. Welcome, everyone. Let's see who comes in today. It is 9:59, and it says Megan is now live in FigScore again, by the way, Dana. So give me 1 minute, everyone. One second, everyone. All right, we're back. Sorry about that. So if you're on YouTube or if you're on Facebook Live, welcome everybody. This is, I think, our fourth installment of FigScore Network, and I am looking to continue this as long as I can as a resource for clients, for small businesses all around the region and the country. So hopefully we can build this up and this can become a real good resource. So what we're going to talk about today is the adjustments and the application that happened to PPP, the final information that came out. Now, is it ultimately final? No, there's still some nuances that are out there, which I'll briefly discuss. But this is going to be my last PPP sort of detailed webinar. Happy to answer anybody's questions outside of this and so on and so forth. Always there for anyone who wants to hit me up on email. It's jeff@YOCFO.com. And what we're going to do today is go through slides and go through some of the changes on PPP. Then what we're doing is we're setting the stage for really what our business is about, meeting your outsourced CFO, is how to help people manage in times like this and manage back to growth. So next week, we're going to have a special guest along with me his name is Mark Kesty. He's a sales professional. He helps a lot of organizations with structuring sales strategy specifically. So we're going to sort of jointly discuss things next week. So please join next week because what we're going to do is we're going to take the information we have from today and how to apply that next week towards your goals. So I'm going to jump right in, give it a minute or two here more to see if anyone else hops in, and we will get moving. So today we're going to go over the final pieces of the PPP. So give me 1 second while I share my screen. Oh, and everyone, I am listed as, on Facebook Live, I'm listed as Megan. I don't know why. There's something with our admin construct there that we're trying to figure out. So what I'll do is I'll take a brief pause between slides to see if there are questions. Okay? So let's start with this. PPP loan forgiveness. Properly using your allocation for forgiveness and then moving forward. So what were the changes? Number one, here were some important changes. As we expected, and I had mentioned on our last webinar, that the alternative payroll covered period might be adjusted, meaning they were saying you could do your payroll calculation when you received the funds, when you paid it or when it cashed out of your bank. That was the first iteration. They said that still stands. So an example, you get your money on April 20th, you run your payroll on April 21st, that counts, and then your subsequent 4 or 5 payrolls after that were within that period would count towards the forgiveness calculation. They then revised this and said you could do that, or you could do sort of your accrued payroll or worked payroll. So if you, April 20th, you got your money, and April 26th, you did your payroll run, and that was really for the previous 2 weeks. you could use that calculation instead so that you can make sure within the time frame you can get all of your payroll costs in. That was a good change they made here. It's still a 56-day, as you can see here, 8-week period of payment. So you can be on a biweekly or weekly schedule, or a 24 pay period schedule. So when on the application, when you fill it out, which by the way, the applications need to go back to the lenders that you borrowed from. And usually, I believe it's within 60 days after the end of the period, you're supposed to get that back to your lender. So lenders are coming out now with all the information, what they're requesting. I know one lender, Mid-Penn Bank, which has been very good to us, a couple of our clients, is coming out with a DocuSign format for you to fill out the application, which is very simple. So that'll be nice. Make sure you fill it out right. You need to pick whether you're an alternative payroll covered period or you're a covered period, which is the cash period. So that is an important change that just happened with this. Any quick questions on that before I proceed? Okay, I'll keep going. So next slide. Executive payroll. Everybody's been wondering about this. So this is really interesting what's going on here. So there has been a change here. Now, it does seem, from what we know, that guaranteed payments count. Okay? So guaranteed payments or constructs that you did previously for ownership will count in forgiveness. Payroll will count for owners, obviously. Okay? Or general partners in this slide, as you can see, are a self-employed individual. So what's been made more clear is amounts paid cannot exceed the lower of this number over 8-week period, which is $15,385, or the 8-week equivalent of their applicable compensation in 2019. So what does that mean? Let's say you're an owner and you're making $75,000 last year. That means the most you could do is $75,000, even though you have the choice of $100,000 or $75,000. Now, here's an important scenario with that. That's what they're saying. What they have not made clear, and we're still waiting on final guidance for, is whether that payroll can still be $100,000 for an owner. Let me explain. Why couldn't you give yourself a raise as an owner? If you're making $75,000 last year, couldn't you make $100,000 starting in the beginning of this year? The answer is yes. So really the question is, what is the final scenario on that? We all know it's capped at $100,000. But if you want to do it, I would recommend the best way to do this is if you can do it. And what I mean by if you can, if all of your employees are covered at their normal wage that they were previously, and you brought them back at their normal wage that they were, or new people you hired that were at the wage that they needed to be for a full-time equivalent scenario, and you hit the safe harbor, you had all the employees in that you had previously. If that is the case, and there's no lesser amounts paid, and you still were able to pay yourself $100,000, I would personally argue, as the owner of a business, that would be acceptable. This is the question mark we still have with this ruling on this. Can you still do that even with paying all your employees? So to make it real short and sweet, our recommendation is if you can, you have enough funds in the 75-25 ratio, and you can, or more ratio to payroll, pay $100,000 to yourself and cover all of your employees, then go ahead and do it during the 8-week period. If it comes after another few weeks to a month that they say, nope, you cannot raise your salary above these levels, then you have to backtrack, meaning you will not get forgiveness for that owner amount. But at least you've had it in there. It's done. All it will be is adjustment on the forgiveness, and we move on. So that's kind of what we're saying to do at this point. Any questions regarding that before I continue? All right. Looks like there are a couple questions here. what if we already got the PPP? What if we already got the PPP? So I'm not sure what that means. What if we already got the PPP? It just means, yes, if you already got it, then you have to go with what you've spent already and adjust accordingly to the end of the period of the 8 weeks. So I believe that's what you're referencing on your question. Are distributions separate from payroll for owners? So what they're saying about distributions is similar process to payroll. What you were paying yourself last year or what you're paying yourself consistently as a distribution or as a guaranteed payment, they're calling it a lot, which is, a normal structure that comes through to the owner, you would pay yourself the same for that amount. So I wouldn't get hung up on the word distributions. I would just be using it as for sort of what you used to pay yourself and do it that way. So any other further questions with that? Make sure before we continue. I'll come back after the next slide and happy to answer more. So the next slide. Full-time employee status and reductions. Okay, so this was the trickiest thing, one of the trickiest things here that a lot of people were asking. What if my employee quits? What if they, which I'm seeing with a lot of companies, they get that extra 600 kicker. They were making 40,000 before. Now they're making 46,000 or 50,000 doing with the 600 kicker. They don't want to come back, So there's a lot of that going around. So they've clarified this. So this is very important. See this first bullet. Any positions for which the borrower made a good faith written offer to rehire an employee during the covered period or the alternative payroll period, which was rejected by the employee. You sent an email. You wrote a letter. They responded. They said, no, thank you. I'm good. I'm not coming back. That, in effect, is what they're saying counts. So if they were fired for cause, they did something illegal, they were just not performing, and you had write-ups, normal HR process, you had write-ups, and you showed that how over the last few months their work was deteriorating and they were fired for cause, that seems that it would count. Obviously, as they voluntarily resigned, or if they requested a reduction of their hours. So this is some benefit to employers because a lot of people are saying, well, my employees don't want to come back as well, not just unemployment, but possibly they're scared. So what they're saying is if you get your forgiveness dollars spent higher up and you hire new people or you bring back as many as you can, they're not going to ding you for trying to do that if employees just don't want to come. So, but you need documentation for this. That's important. Make sure you have it because the banks are going to ask you for it to confirm that level. So, and this last bullet down at the bottom, in all of these cases, include these full-time equivalents on the line in an application, only if the position was not filled by a new employee. That's real important. You don't, if you covered it and you're in the forgiveness structure and you filled it with a new employee, that's fine. Then it doesn't matter. So it's only if you fell short on the new employees and you had specifically tried to bring employees back. I hope that was helpful for everyone. Let me pause for a second and see if there are any questions. Thought you couldn't give yourself a raise. Oh, that was in reference to the last scenario. Well, see, this is important. So we don't know the answer on that. No, you're not supposed to give yourself a raise necessarily during the forgiveness period. I mean, in theory, but maybe the beginning of the year you gave yourself a raise, or maybe it was time for that, and maybe you're doing more at this point. You got more direct as an owner. Look, the bottom line is I don't have the answer. But 100,000 is the mark, or what you made last year. So again, my recommendation is you get there. If it's not forgiven, it's not forgiven. As long as your business can afford it and you're paying your rest of the employees up to the level, then just do it. And then you could also back off of it later. if you need to. But be cognizant you might not get forgiveness for it. So if you need those funds, be careful. And again, as an owner, if you paid yourself, yeah, you're paying payroll tax, but you can always put the money back in. Post this, even if you didn't get forgiveness and you and your company need the money. So that's kind of where we're at with that. Again, I don't know the final regs on this. All right. If you are a sole proprietor, how can you document for PPP forgiveness? So that's a question from Facebook. So meaning, how can you document if you don't have an accounting system? Or, so I mean, what a lot of people are saying is, if you don't have a financial team, if you don't have an LLC, if you're not using QuickBooks or whatever, just use your bank account as that guard, and then track with receipts and invoices and so on, whatever came out of that bank account, and align that up with those. Maybe throw it on an Excel for easy reading for the bank, and just do it very manually if you're a sole proprietor. So that's the way to do it if that answers your question. So let me continue. Anything else further here? It looks like we're good. Okay, great. Let me go to the next slide. Okay, now safe harbor. This is also a big thing. So if you couldn't get your full employees back by, say, June 10th, for example, we received PPP. June 10th is our cutoff day, not June 30th, as far as what we can spend the funds on. So let's say by June 10th, you couldn't get everybody back. They have put in here a date construct at June 30th, the feds. They said that all along, so it's good that they stuck by that. So what they're saying is, by June 30th, if you have them rehired, as of right now, that will count towards your safe harbor. So they might not, the funds you're paying for those people, the salary, if it's between June 10th and June 30th, might not be included in the forgiveness. But the safe harbor will, if you get them up to the full-time equivalent. So let me tell you how this is calculated. They made it really simple. And there was some consternation around this. I mean, all the way back, not to hark back here, but all the way back to sort of Obamacare timeframes and things like that, full-time employees were reclassified in a lot of cases at 30 hours for equivalencies of full-time. Well, this scenario backed off that. So what they said is, a full-time employee is 40 hours a week. Now, they could be salaried. That would be 40 hours a week in theory. Or they're hourly at 40 hours a week. So anything under that is considered a part-time employee and is cut in half of an employee. That's how they did this. So salaried, they're full-time count, and then your hourly need to be at 40. If they're at 39, they're a half. That's the calculation. It's a very simple way that they structured it. So that's how you calculate to see if you're in safe harbor against full-time equivalents. Again, to remind everybody, it's full-time equivalents from January to February of this year, end of February of this year, or last year, February 15th to June 30th for seasonal businesses, or if you just have a calculation there that's lesser. It's a lesser of those two calculations of full-time equivalents, and then you have to match that to get the safe harbor. Which safe harbor means here, let me be extremely clear on this. Safe harbor means if you received $100,000 in PPP funds and you spent 80 of it on payroll, rent, so on and so forth, you're going to get forgiven 80 in theory if your full-time equivalents are back to the top. If they're not, let's say you had 4 people, just for calculation, easy calculation, and now you have 3. That's a 25% hit on your forgiveness. So you were at $80,000 spent, but it's 25% of that 80 that is not going to be forgiven because your full-time equivalents didn't get up there. So in that scenario, that's $20,000 that is not forgiven, and it becomes a loan. So if you were to get your full-time equivalents up to 4, then you would get the full 80. That's how this works now. Everybody clear on that? Any questions before I continue? Just make sure there are any questions. Oh, one more thing I wanted to mention as I was thinking about this. For owners, there's still one question out there. You know how medical benefits and retirement contributions for employees counts in your calculation? There's still an unsure scenario on whether owner benefits count. We know that it's $100,000 in salary for owners is the cap, but benefits over top of that, we're not sure if that counts still. Thinking it will, but we're not sure. Any other questions? Okay. Oh, one more question here. Does the full-time equivalent have to match the amount you applied with? Because our full-time equivalent for 2019 was less than 2020, but I think we used a higher number in our application. That's fine. That's a benefit they're giving you. If you use the higher application the higher amount in your initial application, you got a little more money. That's fine. Now they're saying between those two periods. That's important. So whatever was February 15th to June 30th of 19 compared to January 1st of February 29th of 20. And I think they even go into March 31st of 20 in the application. I'm not 100% sure on that. It wasn't totally clear. But those comparative periods. So if you are a little bit less than it's in early this year, that's the number that you have to match. Okay? And then a corollary question was what if your employee was part-time to begin with? That's fine. Then they just remain part-time. Then that's your count. Your count would be part-time equivalency. So that's where it would fall. My full-time person was not able to do 40 hours because of lack of childcare. What now? So I think that falls into that correspondence construct. I'm not 100% sure on that. It seems like it does from what I read earlier in those slides to you, where you need proof of something that says they cannot come to work. You're giving them the full hours. You need them the full hours. So if you have something from them in an email that says, look, I can't get childcare coverage, I can't come in, I would recommend getting that, and that should suffice to equal full-time equivalency because the work is there. So what if owner was not on payroll prior but is now doing all the work? Can they go on payroll? Sorry if this is a repeat question. Well, I kind of touched on this earlier. So my normal business management thought process for small companies would be, if you can't afford necessarily all the people in your business model, and the owner has to become what I'm calling more direct, meaning work more on the actual work than maybe be the CEO and running out there doing business development or trying to grow the company. Maybe they have to get back in the weeds, so to speak, and work more on the business. We all could expect that, right? So I think that that's okay. But your question is, can they go on payroll? So that's a little weird of a scenario here. I think it doesn't matter. I think it's your choice for an owner. If you go on payroll, you're paying payroll tax. If you don't go on payroll, you're avoiding the payroll tax. So, and it is believed that guaranteed payments construct will count here in this scenario. So that's up to you on what you want to be doing there with that. That's where we stand on that, at least what we believe. So also, another question. Also, does it have to be the same person as full-time equivalent, or can be a different employee? It absolutely can be a different employee. They made that clear. So let me show you on this slide, just to hop back real fast. So right here. Right here. Only, this is regarding your exemptions, but only if it was not filled by a new employee. If you fill with a new employee, then you get the same count of full-time equivalents. It's about keeping people employed, and not everybody can expect all the same employees to come back. It's just not realistic. So that's where the ruling has sat. That I believe is very clear now. So let me go back to the slides. If I see we've gotten through most of those questions. So here, before we get to that, I want to talk about one more thing here. So, and get any last questions on PPP forgiveness. So what I'm going to do is I'm going to jump into the next piece, which is really important for business owners. This next couple slides, and these are the last two slides, I will get into in a second here and explain why it's so important. And I just want to get any last questions before we jump in. Does the employer's portion of the payroll tax include in the payroll cost for the forgiveness calculation? No. Payroll tax is not included in the payroll cost for forgiveness calc. No, 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 no. 100%. So only the gross payroll. So that is for sure. And it is the state and local taxes that still they're saying count there, but not your normal payroll taxes like your FICA, Medicare, so on and so forth. That is not. What the government has allowed you to do, which is great, don't forget about this. Social Security tax, 6.2%. The employee pays it, the employer pays it. That when you have employees, that's how Social Security tax works. Up to $132,000 salary for every employee until they make that during the year. So that the government is allowing you to defer for the rest of the year. So no, it doesn't count for forgiveness, but you can get the cash benefit of it if you defer it for the rest of the year. ADP, payroll companies all over know how to do this. You call them up, you say, I want to defer Social Security tax. They go, great. They flip a switch. It's deferred. You have to save for it. They're not going to help you with that. So you have to make sure you have the money for it. That's the important piece. 6.2% of every payroll that goes out. So $6,200 on a $100,000 payroll a month. Let's give you an idea. You could save that cash, but you have to repay it. Any other questions here before I jump in to what I would argue is also extremely important information for your business? Okay, I'm going to jump into the next part. So this is what I want to talk about as far as a couple quick things here, as far as what to do now. This is real important. PPP funding is going to be exhausted soon. Some companies have 3 weeks, some have 5 or so remaining on the PPP funding. Maybe some are just about to get it. They have 6 or 7 weeks. Okay. Some are going into July. But in July, this is going to be exhausted. So what's important here is, what do you do as a business owner? Has your revenue been hit? Does your cost structure need to be reevaluated? Were some unproductive people gone and now you want to bring back productive people? So how do you manage that? What does this mean? How do you do it? I want to highlight 2 concepts that I think are very important. 5 minutes. Let's say you have a new opportunity, a new revenue source. You're an entrepreneur. You think, wow, I can go more online, or I could do this, or I can do more delivery for my product. Great. What do you need? A salesperson. Okay. So how do I utilize PPP funds to bring on new employees that can prove beneficial in pursuing savings? That's first. Maybe you bring on an employee that could help you take away some of your other processes that were inefficient. That's one thing. But let's talk about a salesperson. Okay. So I'm going to give you a specific example here, and I'll go through this as fast as I can. You can achieve greater loan forgiveness by hiring people back. So let's say you received $100,000 on your PPP right here. Your previous full-time equivalent count was 8 people. Your current count is 7. Okay? That's not dollars. That's supposed to be people. Okay? You are estimated use for PPP forgiveness right now is 92,000. You haven't used it quite all of it. You've used 92,000 of it. Is your estimate to the end of the 8-week period. You have 4 weeks left before your end of your 8-week period. Let's assume you say, I'm going to bring in a salesperson, a new full-time equivalent. Here is this person, 4 weeks of payroll, $4,000 extra cost out of your business. Okay? Now your PP total is 96,000. It was 92. Now it's 96. So what did you do in that scenario? Remember, you were one full-time equivalent behind. Now you're at all of full-time equivalents. So you have hit the safe harbor right here. You hit it. You not only paid that person for a few weeks and got them on board early to help you pivot and get into some new sales channels, but now you hit safe harbor. So what does that mean? Well, one more employee, remember, this is a percentage count on forgiveness. One more employee gets you to safe harbor. If you didn't have that employee, you would have lost $12,000. Now, lost is not the right word. You wouldn't have been able to get forgiven $12,000. $12,000. So you paid $4,000 for a new salesperson. You got it as part of the forgiveness additional dollars. And then you also got $12,000 more that you might not have had of savings on forgiveness. This is the way you be smart with the last 3-4 weeks of your forgiveness. Now, if you don't need a salesperson, this might not make sense. Maybe you hire a bookkeeper or an accountant, internal accountant, who can improve your financials and get rid of some of the other costs you're using there. I don't know what that is, but think about this. It's very important. That's one aspect. Any questions regarding that? Sorry, back to camera here. Any questions? Great. Let me continue to share the slide. Okay. That's one last slide to fly through this. And I'm getting used to this new system here. So I'm navigating between a system called Restream, which is pretty neat because it has us live on a couple platforms. I'm navigating between sharing the screen and putting the video back up and just getting used to it. So appreciate the patience. One more quick point, and then we'll move on. Imagine if you had the ability to boost marketing spending, okay? This is different than hiring. I want to be clear with this. This is thinking right after PPP. Let's assume that your money was $100,000 again, okay? Your general monthly revenue was $100,000. So you received $100,000 PPP, but your monthly revenue is $100,000. You only spent $60 of your PPP. Here's your $60 forgiveness. So you have $40,000 left in dollars. You have $20,000 in otherwise operating expenses. So really, at the end of the period, to be very clear here, you're sitting with $20,000 of what is called right now extra cash. I'm calling it discretionary dollars, but extra cash that is now in a loan function with the PPP. So I'm not saying use that specific money. Let me be very clear here. This is the thing that you have to do. See my note here. Please note, you must certify that any remaining loan dollars need to be used for the recommended PP uses. So you have $40,000 left. If you're going to use $20,000 of that, or even if you're going to use all 40 of it, it has to be for payroll and rent and so on in that same 75-25 construct. What that means is you can't shut down your business and say, I got $40,000, I'm off to Vegas for the month, or I'm going to Mexico for a year and bartend. Okay? That's not going to work. They're going to get you for that, and you're going to get sued by the federal government. Okay? But what you can do is have your business operate normally, take that money, put it towards payroll and so on. Now you have extra money in your business. You have $100,000 in revenue coming in. So you have extra dollars. Use those dollars. Use it aggressively to reposition your business. If it makes sense, throw it in marketing. Imagine if $20,000 in got you a 6-to-1 return on marketing, $120,000 in new sales. Now imagine you're at a 50 GP, gross profit. You just added, by taking that $20,000, $60,000 to your bottom line over the next or not your bottom line, but after your gross profit over the next 6 months. So there you go. Then you repay the $20,000 and you got a net return of 200% on that $20,000 that you invested in marketing spend. And the worst case, as you see down here, your $20K needs to be repaid from future profits. Okay? That's being smart with your dollars. That's what I want to emphasize. So let me end this slide and come back to the video. So that's being smart with your dollars, and using them to position your business to come out of this strong and get back to growth. That's real important. And maybe it's not for marketing dollars. Maybe it's for buying something to help stabilize for efficiency and so on. Fine. You're using your own operating capital. You're just certifying the PPP funds are used for payroll and so on. It's a great way to do it. The government wants you to succeed. They want entrepreneurs to succeed. That's what this is all about. And keep people employed, of course. So, sorry I got a little in the weeds on that, but I think it's really important. And I think that I want everyone to understand who's on this week. Next week, we're going to take those concepts that I just talked about, give some real life stories about how companies are trying to do that. And Mark Keski, who's going to join us, is going to talk about ways that you can creatively approach sales and marketing, mostly sales function, to expand in this environment, really. How do you do sales in this environment? If a salesperson can't go out, what do they do? Talk about some of those approaches and how to get money in quicker for various businesses. So that's the good stuff, guys. That's the stuff that helps us all get back to healthy and making some money and getting back to profit in this crazy environment that we're in. So let's see if there are any last questions. I'll take questions now. That's it for the slides. Happy to take questions. We have a few more minutes. Let's see. There's one more thing from a little while ago. Please remind me of the employee dates for qualifying. The employee dates for qualifying. June 30th is the end date of the employee, if that's what you're asking, when the employee's full-time equivalent will count. So, yeah, that's it. That's the time frame. And hope this was helpful. Again, we're here to help. We love supporting the small business space. We want to see everybody succeed, get through this, and thrive. Jeff at YOCFO.com. If you want any questions, please join me next week when we get into really how to get your business, your engine going again. And enjoy your day, everyone. Speak soon. Bye.